Hello, and welcome to Preferred Return, podcast about the state of technology and private equity and venture capital. I'm your host, Jeff Williams, SVP of Industry Solutions and Strategy at Altvia, a software provider with the vision of creating a single source of truth data set for private equity and venture capital firms. It's our hope to share interesting stories, profiles of firms, people, service providers, anything else we can to help create an interesting conversation about the state of technology in the market. I make all the podcast music, so I hope you dig it. Either way, thanks for joining us. With that, let's get after it. Hello, thank you for joining us again. This week, I am stoked to be joined by Steven Greenberg, who is the co-founder of Totem VC. Totem VC is a modern fund operating system, software provider, and very interesting history. I've heard and been aware of Totem VC for years, but haven't had a chance to personally meet Steven until now. And so I'm very excited about it. Super interesting history. And I'll let Steven tell us all about that. So, Steven, thank you for joining us. And why don't you tell us a little bit about your background, where you came from, and how you sort of ended up here with us today?
Sure. So I was working as an associate at the time at a New York-based venture capital firm. And as you'd imagine, we reached a point in time where with every new investment we were making as a firm, we were digging ourselves deeper and deeper into a hole. And we looked around for tools that could help us with the various problems we faced as a firm. And that was everything from helping us manage our pre-investment process of deciding which companies we were going to invest in across a team of investment professionals, to actually tracking all the investments we've made around those companies once we've decided to pull financial data from companies, all the way through reporting. And I think we found, from looking on the market, really one of two kinds of tools that existed. On the one hand, you had your CRMs, which were really good at managing contacts, really good at managing pipelines, but fell flat on its face when it came to all the things that we needed to do as investors that were more finance-based, whether it was tracking cap tables of our companies, the financials of our companies, et cetera, fund performance. And then on the other side of the world, you had the tools that were really great at doing the back office functions. We're not so good at some of the people-based use cases and pipeline management that I described we also needed. So when we took a step back and kind of looked at the problem that we were facing internally, we realized that it was the combination of the people-centricness of a CRM married together with the financial centricness of a back office tool that needed to be married together to solve for the various pain points that we face as investors every day. So we started tinkering internally, initially thinking this was something that was going to scratch our own itch. And after a couple of years of building and replacing spreadsheets and becoming more efficient as a team, I think people were pretty excited about what we were doing within the firm, to the point that there was starting to be some rumble of what we were doing outside the firm. And I think it naturally evolved into people saying, hey, we have the same pain points. Can we license what you guys have built? And that's the point at which we started thinking about whether we can create a consortium around this. And ultimately, we decided this was something that would be better served on the outside walls of the venture capital firm that we worked at. We spun it off and have now been operating as a standalone company ever since.
Yeah. I'm interested to kind of dig into that a little bit. There isn't like a governing authority who says you have to have those two things married, right? Nobody has a gun to your head. So it's not like every firm's out there like, well, we have to do this because if we don't, we'll be out of compliance with the law. Which is to say there is a different sort of problem that's had than just the absolute sort of in the abstract connecting them. What is that problem? I mean, what we typically see is that like that's all information that's pretty related. And so to have it separated is problematic. It causes more work, right? And oftentimes that's, in my experience, like high stress, low amount of time to do it type thing, because it's typically analysis based of some sort. It might be this recurring analysis, but a lot of times it's one-off requests from limited partners. Oftentimes a lot of traffic and requests like that during fundraising, stressful period, and we're scrambling to, kind of provide something. What's your take on like that? Again, there's not a governing authority with a gun to firms' heads to do this. There's a different motivation. Is that sort of more or less what you guys were experiencing as well, and the relatedness of the information?
Yeah, that's actually the reason why it's called Totem, is because of the fact that we believe we're retaining institutional knowledge and relationships. It's the same way that a totem pole, did that in the past, retaining history. And I think what we were trying to solve for was we're a growing team, members come and go, but being able to capture what our firm's relationship with any person or company, regardless of whether they're a company that we perhaps were tracking as a deal once upon a time, somebody that referred us a deal who might have also been considering investing in our fund as an LP, who may also be a co-investor on a cap table of ours. Because those things live in very different places, we knew we needed to have that centralized in order to create that global view that we wanted to really understand at any point in time what our relationship is with any person or company, regardless of whether they touch the front office or back office.
Yeah. I want to talk for just a minute about FF. I don't know a ton about FF, but what I do is largely a holdover from this period I recall as like the super angel kind of mania, right? Like maybe FF was a little bit upstream from that, but around 2008, 2010, there were all these high profile angels, Jeff Clavier, Mike Maples, Aiden Sinkut. And the reason I say that is because like what I saw from an institutional LP's perspective, fund of funds looking at these things, and we can't ignore this. OATV, that's how I came to know Bryce Roberts, was like, man, the returns are outstanding, right? And like this, we were early stage venture focused as a fund of funds. What we found early on in that period was like, okay, well, it's just a different sort of animal, right? It's not the NEAs that have been around for 40, 50 years, Fund 15, Fund 18. And so it was much less systematized at that time. FF, I don't know where they fall in that, but I'm sort of saying like a lot like Jeff Clavier, some of these angels, it was like, hey, we're going to make you money, right? But we don't have the same infrastructure, the same sort of process that some of these older firms do. And is it fair to put FF like kind of somewhere in that range?
Yeah, I think I would consider them early in the micro VC evolution.
Yeah. And so what's interesting about that is that the dynamic I'm describing, which is, hey, we're not like the sort of old school venture firms that are on Fund 18, what is the same dynamic that caused a lot of things to be rethought. And the thing that you and I had talked about previously, by the way, I didn't know that was the origin of the name Totem. And I think that's super cool. I love it. But what we were talking about previously was how there's like a new breed. And for a long time, I think there was a question of, okay, if you are one of these old school firms with 50 years of track record and pretty consistent returns to LPs, your LPs aren't sort of saying, oh, we need you to be data driven and provide all these. It's like, we're, as an LP, we're just trying to get into these oversubscribed funds. We'll take what we can get. But there is this new breed, and they operate differently, and they're just saying, well, hey, like, we're going to do things differently. And technology is a big part of it because it happens that much of the investment opportunity they're pursuing is early stage software and technology. And I guess if you stop me now and said, okay, what's your take on Totem? It seems to be this like super cool organic evolution of that coming from out of one of those firms where it was like, hey, we don't really find the thing that suits our needs. We're going to build this ourselves and solve a problem that is logical at this point to stop and solve versus, hey, we'll figure that out in 15 years. It's like, no, let's spend the next 15 years operating differently, quickly, using technology, data, stuff like that. Fair characterization?
Yeah, I would say that new crop of funds that came along at the micro VC stage, I think a lot of them were rethinking process for how venture capital got done, technology, the tools that were being used to facilitate the process, whether it was automating diligence or just creating operations tools like we were to make things more efficient, all the way through, I'd say, full-blown platform, which was this black box term at the time of firms that were trying to differentiate themselves with services. And FFVC had an interesting in-house accounting team. So the idea there being that you're an early stage startup, you might not have a built out finance and accounting function. Perhaps one of the founders is quasi doing that on a quarterly basis, but you really want to have the depth, not just of being a bookkeeper, but being able to do strategic finance. So that was one of the value adds that FFVC was able to provide was at cost accounting to all of the portfolio companies. Now, that certainly created a bit of a situation where we needed to have a Chinese wall because nobody wants to think that there's an open kimono of data, coming from the accounting firm to the VC fund. But I think on the whole, it was a very value-added service that its early stage founders loved having that full stack team of strategic finance talent that they could tap into, whether it was them modeling out their next raise or figuring out their pricing model, figuring out their burn rate and how to manage against that. So there was a whole slew of different firms doing it in different ways. I'd say First Round Capital was probably the biggest name at the time who was, reinventing what was called platform.
Yeah. So going back to the kind of problem and you guys jumping in to solve it, we discussed this previously. I mean, a different origin at Alvia, obviously. I mean, we did get started very much in that pipeline CRM stuff, But there came this point in time, and in large part, a lot of the experience that I had previously was like, look, you can be on the investment team and be asked for information during fundraising, right? Like, let's dig into the track record this way or that way, or what's been the performance of this thing. And like, even being on the investment team and being asked for that, I found myself oftentimes like, where do I go for that, right? Like, that, in theory, I'm the creator of that data, and I'm still sort of left like, I don't know where. And again, that's not this gun to your head problem, but the practical problem that is there is I'm going to be here all weekend, like very little sleep to try to hurry and get some things scrambled. And for the most part, I'm going to be pulling data that has huge sort of governance issues, if you will, right? I might have to go through like a board deck or PDF of financials, and I have to key it in, and I don't know if this is, maybe they've been revised, or maybe there's a V2 on someone's desktop that's not on the shared server. And so I think I'm getting the right stuff, but I'm taking it all from different places. I'm typically going to go put it into Excel. And then all of the sort of error-prone things that I've done here, versioning, keying the number wrong, or wrong calculations, stuff like that. And then it's like, okay, I got this, right? And I always was like, man, I don't know. Doesn't seem like it should be that difficult. But I say all that because the way we looked at that was very different. And I think that's ultimately very similar-minded companies today play pretty different spaces. You know, I told you when we were first chatting, I guess, frankly, surprised we don't bump into, you know, each other more often, like on a competitive front. Our approach was one where it was like, okay, like there are systems doing that, and most of those systems that we're doing, fund accounting or portfolio level accounting, or at least financial reporting, were these old school, big, heavy, very expensive solutions. Like the, you know, InvestTrans come to mind. The next round at the time, a little bit less prevalent now, but it was like, okay, well, we're not going to really get into that business. So we focus more instead on, okay, how do we get that information, right? A lot of those companies that evolved to have portals themselves because they had that information, oh, let's display it. But it was like, that's a really intimate step in the relationship with our LPs. Like for us, it was like in CRM, kind of makes sense to be managing that relationship, at least have insight into that as a relationship activity, maybe gain some insights from what are they looking at, and maybe I talk to them about that. So we took a totally different approach, and all that to say, a little bit rambling, but all of it to say that we've ended up playing in kind of slightly different spots. And I think what you guys see a lot of is that sort of different kind of emerging type manager, right?
Mm-hmm. I think what was interesting is when we came to the realization that what we were building could be useful to many other funds, we started naturally as investors who do lots of diligence on other companies, doing diligence on our own product and talking with all of our peer funds and trying to figure out what it was that the value of what we had built was, and how much we could potentially charge for something like this, what the structure would need to be around it. And what was really interesting was we kept talking to firms, and what was so validating to us was the fact that so many firms were going through the same exercise of hiring a software engineer and trying to build out the same views that we were building out. Everybody was seeking that God mode that tied together everything they were doing in the front office to give them that global view of how their funds were performing, both at the GP level. Obviously, you care more so about fund performance, whereas maybe someone like an analyst or an associate just cares about any given deal at a certain point in time. And the fact that so many firms were hiring software engineers, which was not in their core competency, to build very much the same exact tool that we were building, I think was very validating, and knowing that we were onto something.
So is it the case today that a lot of the folks that you're working with are kind of still like on that sort of emerging-ish type side? It's typically a very quick, very straightforward, very repeatable way for firms that don't have all this institutional process hangover and cultural struggles to commit to technology. These emerging firms I'm referring to are sort of born that way, like it's in their DNA. Are you guys still seeing a lot of activity with those guys? I mean, the thing ultimately I wonder about is there sort of somebody on the trail here, right? And some of these older kind of stodgier firms are like, we've been together for 45 years, and that's really the story. But what it comes down to is if technology has an opportunity to transform this, like people are going to use it, and there might be some people on their heels that they're not very, open to admitting.
We primarily work with three buckets of customers. On the one hand, we work with really small emerging managers. Sometimes it's just a single individual making investments. who perhaps doesn't have the pain points that we're solving for from day one, but wants to put in place a system that will create a backbone as they're scaling. I'd say the second group of customers that we typically find we engage with are firms that are going from fund one to fund two. Maybe fund one, they did things back of the napkin, spreadsheets. It was just a few family and friends that were their LPs. And now they're raising fund two. They're looking to do more institutional capital to come in as an LP base. They want to do things properly. They saw how things can go sour if you don't have systems in place and want to correct things for fund two. So we'll typically step in at that point and kind of help clean up the past and help them set up the foundation for them to continue raising new funds, all the way through your larger funds who perhaps are already past the point of facing these pain points and maybe come in with a specific need, whether it's around collecting financial data. I think that's probably one of the bigger things we do for firms, especially in the VC space. There wasn't a lightweight way for firms to be able to collect information from their companies. I'd say at the PE level, and probably what you guys are dealing with, there are a few vendors, I'd say, which are cost prohibitive for the venture guys and probably overkill. Right. In the VC's cases, they typically will need 4 or 5 high-level metrics. Right? How much cash does the company have on hand? How much do I own of the company? And what's their latest revenue metric? Like that alone is something that is difficult, especially in the dozens or hundreds of companies to be able to achieve on a quarterly basis. And we've helped automate that process. So,
yeah, super cool. I'm curious to get your take on what's going on, like in more buyout type stuff. You just mentioned it there. The thing that's become really interesting to me, for me in my head, this all started as, okay, well, look, the information at some point is different information. You've got fund accounting, you've got like portfolio company reporting, all that stuff. At the end of the day, all that information, like it's good to have it, but really the point of it is to provide it to constituents, right? We're in a world firmly today where like information is everywhere. And to think that in this market, like you couldn't, as an LP with huge dollars committed to the asset class, and you sort of struggled to like get information about where the money was outside of like cryptic PDFs. But more recently with the buyout stuff, what I feel like, at least from my purview, is shifting a little bit, and I'm wondering if you guys see any of this too, but is that there's now technologies emerging a lot more on the competitive investment opportunity side, which is to say, like, before all that information is even appropriate, we need to use technology and data to find companies faster and before somebody else, or find better investment opportunities. And so been a couple of things recently that are interesting to me, but the availability of information to venture and private equity firms. And I think there's some venture firms that are doing this stuff probably in a way that's pretty amazing, and they're pretty secretive about it. But just the idea that like, how could technology and how could data allow us to find companies faster, find them actually proprietary, instead of using the term proprietary to mean we're all calling the same banker and hoping that we get into a deal. What do you see on that front? Is there anything going on there that you guys see?
Yeah, there are a lot of firms that like to, call what they built their special sauce. I think there are some firms that have gone and really built out proper, data science teams. And you can see that based on their headcount and the kind of people that work at the firm, that there's really something to it. Whereas others are perhaps pulling data via an API and doing some sort of simple sorting algorithm on it. I wouldn't necessarily call that all that sophisticated, but in any case, I think these firms see what they're doing as their special sauce, and whether it's procedural or whether it's access to a certain data source that nobody else has access to. It's definitely, I think, more oversold than reality from my perspective. I think a lot of the firms are still facing trouble with the ABCs, right? Like, how much do I own of a company is a hard question for a venture capital firm to answer. So it begs the question whether they're able to have some sophisticated engine that's going to like find them the next, Google it's a hard leap to make. Very much like, I'd like to think that we're solving a lot of the nuts and bolts data capture and display issues, and then enabling, the firms that do have the additional bandwidth to be able to build on top of that with whatever version of their special sauce they want to apply to it.
Yeah, love that. I was having dinner with someone last night, and I was joking that on this topic that for some firms, it's like, oh, well, our team's been together for 15 years. So is everybody else's, right? Like that, by definition, can't be your special sauce. You might make better investment decisions, but how do I wrap my head around that? What is there that's not so subjective and qualitative to support that. And it's like, well, here's the technology we're using, and you'll have a deck during diligence that's got screenshots, right? And it's like, well, could we log into that, see what it looks like? And, well, no, it's proprietary. We can't show you that. And really what that means typically is it kind of doesn't, we don't use it. We just use screenshots of it, right? And that's okay. I'm not here to judge the decision to do that, nor the LPs that back that. It's been about a year, almost exactly a year maybe, that I saw MSCI announce a partnership with Microsoft that I thought was fascinating. And MSCI, of course, is a very interesting player. I think they're going to be the first to sort of quote unquote win the ESG data game, all that stuff. But super interesting in terms of very data-driven company in capital markets. And then partnering with Microsoft to use Microsoft's AI technology, which is world-class at scale. I think the press release said something to the effect of to provide better investment decisioning, right? That could mean a lot of things. For me, with this sort of story I have about what we're talking about right now, is like, it'd be really interesting to see how that plays out. Because in theory, for me, it could be that like, if MSCI can properly grab the data and Microsoft can apply world-class AI technology at massive scale with very low cost, that like, we may not be that far from the day where instead of people looking at sourcing as this thing of like, I have to make sure I call this banker every 15 days. It's like, the only reason you're calling the banker is to have him tell you about a company. And maybe there's a point in time where this MSCI Microsoft stuff, at least as the poster child in my brain, represents this like, nah, we're telling you to call that company before everybody starts calling the banker. So it's super interesting. I don't ever think we're going to have this market be transactional. Obviously, there's a lot behind investment decisioning and process of digging into a company, but at least on the sourcing front, this market is so competitive and will do anything that like, it's not that far-fetched in my mind to think that people are going to start putting a lot of resources towards using data to find the targets before anybody else.
Yeah, I would say I've been seeing a bunch of new tools creating signals that are novel, at least to me. Firms that are scraping team pages on different startups' websites and seeing, what are the companies hiring for, which is obviously an indicator of what direction they're headed. They are capturing screenshots of the pricing pages and seeing how that evolves, which might inform how the product has changed or how the value proposition of that particular company has changed. They're scraping SEC documents to see the new filing of companies or funds. They're looking at LinkedIn title changes to see if somebody just left, one of the big tech companies and perhaps is going to start a new company. So I've been seeing a lot of new data signals that are being created. I think firms are still grappling with how to tie that together with their process to actually make those signals useful.
Yeah, totally. And I love that you use signals, because one company I really started to see this in early on, and I've mentioned on the podcast before, is DataFox, which is a company that was like, uses the term signal to capture these things and then provide them to you. And ultimately I mention it because I think it reinforces your point, which is, hey, the signals are out there. And the filings and what does it mean to you? What are you going to do with that information is where there's still a sort of huge opportunity for differentiation and for strategic weapons for firms, right? To say, okay, so the pricing changed. All right, what does that mean? Should we call the company or not? Or when do we call the company? And that's what is still kind of left open, which I love, because people, if they're focused less on how do we build, hire software engineers, which to your point, we don't, have experience hiring. How do we use what's available? And then what do we do with that information? And how is it actually differentiated? It's a fascinating topic.
Yeah, another one I've heard is looking at the customer logos. Obviously a lot of SaaS vendors will have their big customer logos at the bottom with testimonials. So being able to scrape those and see if perhaps you have a new Fortune 500 that became a client. So those are really interesting signals that now exist by some of these data providers that are aggregating it. I still find that at least the firms that I'm engaged with are dealing with, have we spoken to this company?
Oh, yeah.
With this company? So I think we need to get the ABCs right, and I'm hoping we can be the player that helps them get the ABCs right to allow them to work on how they differentiate and what is their strategic weapon.
Yeah, and it's sort of like the Mars conversation, right? Really sexy thing to think about. You're less like, hey, like a bunch of people are going to explode on the launch pad well before that, and bringing it back to this. I mean, people are really fumbling with some pretty basic stuff. Let's not get too carried away, but it's still one of those topics where I catch myself, ooh, what's that going to be like? And I don't think there's any question that it's going to change, and we can only make the best assumptions now in terms of how it will change. Definitely going to be some time, but super interesting in this market, given how competitive it is, to think what will people do with that, and will it be this thing that really does finally flip the tables in terms of, like, as an LP looking at these emerging managers, like, no, this is actually differentiated. We're betting on this horse because we really think that what they're doing will lead us to better returns than the alternative.
Yeah, I think the other thing that's going to help here is the fact that a lot of new data sources are being digitized. So I'd say the big one driving the possibility for future analysis is the fact that now deals are being syndicated online. Right. So whereas, you as a single investor, perhaps you've done hundreds of investments, that's not a meaningful enough data set to be able to really glean too many insights. But now that there are, tens of thousands of deals being syndicated online, all with structured data, I think the ability for somebody to come in and build an analysis layer on top of that, and the performance, that has been driven in different sectors at different times with different types of investors, that's where things, I think, start to get interesting from a data play.
Yeah. The thing that's always so fascinating is that you look at something like this, and then you say, okay, so the example I used last night at dinner was one of the things that's probably a little bit less available, but which isn't far-fetched to think about being able to capture. But years ago, we figured there were close to 100,000 privately owned companies that had survived .com and were bootstrapped, which, if you look at that timeline, there's a lot of founders that probably coming up on, like, college and could use a little liquidity. And that's why these growth firms have heavy outbound models. Just go find them. But take one of these companies, a fictional one, and say, all right, maybe in a local newspaper article about this founder's daughter, say, right, who's like the valedictorian or high school and is a superstar field hockey player who's got a scholarship, right? So this is all like text inside a local news article. It wouldn't be hurtful to know this information, right? It's okay. There isn't a banker that founder has gone to yet, but that might be an interesting story. And it's a very basic example. It might not even be super easy to do right now because the signals and the filings and stuff like that are more sort of structured, at least a little bit. But what could you start to do with that? And then the point that I was going to make is that maybe that's a good thing to know. Maybe that's a good investment opportunity. Maybe it is differentiated, stuff like that. Once you get some repetitions with this stuff and machine learning models come in and start to tell you, do more of that, that's working, or don't do that, that doesn't work. It's unique, but there's nothing in there. There's no ponies there. That's now this compounding effect. And we're living through the golden age of these technologies worldwide in all sorts of markets. It starts to become really pretty interesting what it could do in this market. I want to get your big prediction, whatever it is. I mean, it could be about Mars. But obviously we're both equally fascinated with this market because it's our day jobs. What haven't we talked about that is going to happen or is coming? Or
from my vantage point is I'd say the rise of the individual investor. The world of venture, I think, has exploded, where really the private capital markets have exploded. You have on the higher end, I think the public markets have started bleeding into the private markets because private companies have been staying private for a lot longer and raising a lot more capital. So there's been a shift on the higher end. But in the lower end of the spectrum, because it's now a lot cheaper to start a company, the ability for a smaller check to be meaningful into that company has also grown, micro VC funds, accelerator models, studios, angels. And I think what angels have realized is that in order for them to really be a meaningful investor on a cap table, they can join together as a collective force and invest in companies. And I think you're now seeing this rise of the individual investor able to use, these SPV instruments, quickly spin up an entity, have it funded, deploy capital out of it. And I think, what I kind of equate this to is, similar to the way AWS made it easy for developers to deploy code, there's a whole bunch of new tools that have been created to make it easy for investors to deploy capital. And that's kind of the macro theme. And I have like more specifics on like, who are the players? I'm sure you've heard of like this new concept of rolling funds by AngelList. They're trying to change the model of how LPs, quote unquote, subscribe to a fund instead of commit to a 10-year fund life cycle. There's these tools called Assure, which is purely playing on the SPV side. just making it a few clicks to spin up entities. So I think there's been interesting developments as far as people building for the individual investor and as well as crowdfunding now, I think, becoming a hot topic.
Yeah, totally. Well, the thing that I think about immediately are like those are two big themes in financial markets generally, right? Like democratization of things, and then also like sort of creative ways to take advantage of liquidity. We may have just lived through a period with a SPAC mania, right? It's just like, but beyond the SPACs, which were sort of the poster child, I mean, I've said this a couple times, even on the podcast. It's like, I don't remember ever seeing so much like creative ways to put money to work, the SPVs included. It's wild. So much liquidity. And I don't think that we'll go back. Maybe there won't be as much liquidity, but to your point, like the way that the capital is like coming together and people are collaborating and stuff like that. I mean, it's fundamentally going to change things. It's very interesting.
Yeah. What are your thoughts on like finance-based, or I guess revenue-based financing? That's also now another topic that's been tried to be proven out. I don't know if you've heard of Indie VC. So they tried it and they failed. I forget what they quoted as the reason why they failed, but that's something that I'm hearing about as well.
Yeah, it's interesting too. I didn't know a whole lot about what they're doing, but I do know Bryce Roberts from Indie and from OATV as well. And yeah, honestly, I don't probably know enough to say much intelligently about it. However, the first thing I think about when you say that, and it's appropriate in this case that I don't know much about it, because I'm immediately sort of like, it's got to be something creative, but in a way, it's also at a simple level, like the basic concept of local bank lending, And so I'd be curious. I'm not even sure what the distinction is. It's certainly got to be something, but tell me, like, what is it? What does it mean?
Yeah, I mean, I think the idea is for those who don't want to go swing for the fences and immediately have to paint themselves and the vision of what they're doing as a venture-backed business, you can raise capital in an instrument that would allow you to have a lifestyle business and would allow you to pay back your investor in the form of a dividend, but also would be almost like a convertible note in the sense that the investor is investing technically in future dividends, but that may convert into equity if you do so choose to shoot for the moon later on in your company's lifespan. But you don't necessarily need to be selling that to the investor from day one. So I think that was the initial idea of it. Was it's almost a convertible dividend.
So some distinctions there, some nuance, but for the most part, it's just maybe this big sort of rotation in the way that capital markets provide capital. I mean, it's not that terribly different from more traditional kind of local lending, which isn't, to your point, swing for the fences, but interesting stuff.
I like the fact that venture capital has moved from being a single block on Sand Hill Road to now being a lot more global, and now giving access to individuals to be able to participate in the private capital markets in a way that they haven't been able to in the past. So I'm excited both for the possibility of myself being able to do this while I have a day job of running Totem VC, as well as now seeing a whole bunch of people that previously didn't have access to this asset class be able to participate. And I think it's going to bring a whole new wave of innovation in the kinds of companies that get funded, because it brings a whole new type of thinking in the way you're approaching making investments. Separate to that, I'm pretty excited about the brain, which is just a completely unrelated topic. And I think we are also in the golden era of figuring out how we can really deconstruct the brain. I mean, I love the mantra now in the Valley is, aging is a disease, and it's just something that we're destined to figure out how to solve. And I think everything around anti-aging is super interesting. And I think we're going to see massive strides. I think a recent headline actually came out that the children being born in this generation could possibly live up until 150 years old. And that's by like reputable scientists who have put together that study. So that'll obviously change a whole lot about the world, and certainly about the ways in which people are living their lives and when they decide to do major things like get married or have children.
I love that. It makes what we're talking about in private capital markets seem pretty basic when you think about it. What will the world be like as a result of that? Super cool stuff. I want to throw something out there real quick as we wrap it up. You started a company that provided a service I loved, and you kind of briefly mentioned it, but Unroll Me. And I didn't actually, I think, put that together, nor did I remember the day when it was like going away. It was a very tragic day for me. It was a great service. Like, what? This is silly how much time you spent being assaulted, frankly, in your inbox by people, and had to be a better way to stop being assaulted and just move on with your day and get through your inbox. I'd love to hear just a little bit about that.
Yeah, everybody knew email was broken. The genesis was that we wanted a tool to be able to kind of fix the mistakes we made throughout the year and the bad email habits that we had, and perhaps the assault that other people were putting onto us by giving people an easy spring cleaning tool that they could log into, scan, their inbox, list out all the newsletters they were signed up to, basically click check boxes and decide which ones they wanted to unsubscribe from. Now, ironically, at the time, and this was before laws that came out around how people can send emails called the CAN Act, we were behind the scenes brute force clicking at the bottom of the email where it says unsubscribe, and in some cases filling out a form with your email address, clicking yes, remove from all. And it turns out that at the time that we were doing this, which is about 10 years back now, when you actually went and clicked on the unsubscribe link in some of these spammy emails, you were actually then subsequently selling your email to other spammers, because now this indicated that you were an active email. So in the early days, we actually were creating more spam, and people were coming to us be like, well, I'm not really sure your product's working as intended. We ended up moving away from actually trying to unsubscribe you to a simpler approach, but harder from a technology standpoint, which was instead of us trying to actually get you off of those lists at the time of you receiving an email, we would just take that email quicker than you can get a notification on your phone and stuff it into a folder and mark it as read. And I think the real aha moment, beyond just being a tool that would help you get rid of your subscriptions, was can we take the things that you did like getting? For example, at the time, Groupon and Living Social were still very popular. People like getting those kinds of emails, but I kind of categorize them as they abuse you, but you're tolerant of it. So for those kinds of emails, we came up with something called the roll-up, which would hide those emails from hitting your inbox. And once a day, you would get a digest of all those emails that you can quickly glance through and see if there was something of interest. And I think what would have happened beyond that, what I was excited about that we never got to implement, and I still think is something that could be, especially with the amount of content now, like the amount of newsletters that exist, the amount of podcasts that exist, there should be the equivalent of an app store for signing up for a newsletter, right? In the same way that you're very willing to go and download an app because you know that at any point, if it's not providing value to you or if it's not working as expected, you can literally just hold it down, click an X button, and you'll never see it again. We too thought we could do the same with newsletters, where you can almost like taste test a newsletter in your digest, see what the kind of content was brought to your doorstep, and decide if you wanted to have that as a long-term subscription. I still think that part of the puzzle has yet to be solved by anybody, but I still think is very much relevant today as other channels have gotten really noisy, and email now has become, I think, a sacred place again. And it's interesting, I would say physical mail, right? It used to be that physical mail got too cluttered because of how much stuff was getting sent to you. And now nobody sends physical mail because it's just too expensive. They'd much rather, put their ad dollars towards digital. So now actually physical mail has become a great channel again. So it's interesting how these things kind of, how the pendulum swings.
That's fascinating. I love that. I think that's outstanding. I've never heard that put that way, but I agree with you. I think that's fascinating. I love the way you think. Your brain works. Super fascinating. Thank you, man. Thank you for joining us, sharing some thoughts. Last question. What's your favorite music, man? This is a private equity technology podcast, but we make all the music in-house, and so you just have to throw in something. Favorite band? Like, what was the first concert? I don't know, anything. What moves you? Like, you have a really fascinating way of thinking. It's got to be something in there music related.
Well, I am staring at my record player, which my father would be proud of, that probably has 15 to 20 Beatles albums beneath it. Big fan of the Beatles. I love the mania. I watched the 10-hour documentary. I mean, I think there will never be another Beatles, and I'm sad that I didn't get to live through the craze that existed. Yeah. I love the fact that, with vinyl, you can listen to something and you're required to be an active listener. Whereas with Spotify, I can just put shuffle on. I'm barely listening. It's in the background. I'm not really, it's shuffling between genres. There's definitely a love for vinyl that I've come to appreciate. And I would have to go with the Beatles, just given the legends that they are.
Absolutely. And I think it's like one of those things where they're so legendary that for a lot of people, it's okay, yeah, they're great. But there's so much to dig into, and you'll never really get through it all, and it just gets more and more fascinating. A lot of people don't necessarily ever do that and accept perfectly fine based on just a few inputs that, okay, well, the legend speaks for itself, but, you can go real deep on that. So I love it.
I think one cool thing about the Beatles that I learned from this 10-hour documentary is they were very much a band that was just a boy band that would play feel-good songs at a concert, sell out massive stadiums all around the world. So they were creating music designed around being able to sell out massive stadiums and just play live. And at the time, there were limitations around what could be played live. There weren't the same level of effects that are, possible today. So there were certain things that were only possible in a studio setting. And I think the manager of the band didn't want them to do anything other than produce songs that were meant to be played live, which limited their ability to be as creative as possible. And there was this breakthrough in technology and music that eventually enabled them to start having these sounds played live. And I think that's when you start to see a complete shift in the kind of music that they play. And it's only really when you watch the sequence of how the songs came out and the layers of complexity that are added to it, where you start to appreciate there's more to music than just, bands being in phases at different times of their lives.
Oh, yeah. Well, and a lot of guitar players that really study the Beatles stuff will tell you that it was an early form of an algorithm in a sense, because the music that they were playing in a lot of cases covers early on, like they're finding what people liked. And if you trace back the sort of DNA, which is subjective, but these guitar players would make a strong case that you can start to see traces of what was popular, like sort of Netflix creates content they know is interesting because they know what you watch type thing, right? So that you're playing music people like, oh, interesting. That starts to enable you to create music yourself that is reasonably fair to assume people will also like, and you can start to see some of that DNA in terms of the composition of the music and stuff. So brilliant stuff across the board, and some good timing, perhaps, to your point about the amplification of sound and all that sort of stuff that coincided with it. But very little question in my mind that total legends. I think it's hard to argue against that. So love it. Steven, thank you, man. Awesome conversation, and love what you guys are doing, and wish the best for you. And I'm now just personally super interested in following you and just seeing what you're up to and what you're thinking about. So thank you for sharing some of it with us, and wish you guys the best of luck, man.
Yeah, thanks for having me, man.